Welcome to Drill Down Earnings. We have quarterly results out from Adobe. This is the fiscal 2026 first quarter just reported here. Wall Street likes a beat or a miss. We want to know what the business story is behind this stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. This is one of the 50 most interesting companies in technology, to be sure, and it did better than Wall Street's expectations, better than my expectations in terms of the actual numbers they delivered. $5.71 billion in revenues and adjusted $5.08 a share. So steady growth here, not explosive growth. And we'll get to what their guidance was for the coming quarter and why the stock was down after I was trading here. But the revenue growth is now being driven by AI. They have spent vast fortunes in changing the way these products work to use generative AI in making graphic solutions work, whether it's the vector graphics of Adobe Illustrator or the pixelated graphics from Photoshop or even the documents from PDF documents from Adobe Acrobat. That's what's driving this business here, as well as lots of marketing tools, of course. And AI is trying to make all the processes within this company easier for more people to create. But while growth has been steady at 10%, we haven't seen the explosive growth that maybe some might have predicted when they knew this company was going to be looking at AI. They're not getting left behind by any means by AI solutions, but it has not led to that kind of explosive growth. Now, operating margins are pretty nice for this company, increasing kind of fantastically after their big acquisition here now over a year ago didn't go through. But when we look at the business, when you think about what is Adobe, digital media is it. 74% of revenues from digital media. There are other kind of marketing experiences, what they call digital experiences. 25% of revenues are publishing and advertising business at 1% is kind of not shrinking away, but shrinking to be sure. They've seen steady growth. Their biggest business, again, of digital media is growing really nicely at 9%, or sorry, 11%. Their next biggest business of digital media, digital experience, growing at 9%. The shrinking publishing business doesn't matter that much, and advertising, of course, in terms of growth rates or even the overall picture, it's just 1% of revenues. But that healthy digital experience growth of 9% is really driving the steady growth of this company. Now, the stock, however, was down 4% in after-hours trading, and that's after declining 24% in the last year. Again, I think this is really about a disappointment that AI hasn't accelerated revenue growth, even as margins have hung in there and profits have hung in there. I gotta say that their orders are looking really solid. Their RPOs, or remaining performance obligations, are 343% of their existing revenues. So very strong RPOs for this company. And the real question is AI going to fundamentally change the drivers for Adobe? Here's what CEO Shantanu Narayen had to say.
When you think about the addressable markets that we have, as we think about how we serve the business professional and the consumer and the creative professional and the marketing professional, we believe that that's an immense opportunity that's only going to grow as a result of AI. We're pleased with how AI is now infused across all of our products and how we are further tailoring the breadth of our products to serve these customer groups in a way in which we delight them. And we're starting to outline how the monetization will be different for each one of these and applicable for the customer group that we are serving. And we really continue to believe that this will drive growth and profitability for us as a company in 25 and beyond.
So it sounds like slow and steady is not winning the race with the stock market, but this company growing at double digits, holding its profit margins in really nicely, and saying that that's going to continue. Not a terrible thing. But what's your big takeaway? What's the big drill on earnings takeaway for this? And of course, the drill on earnings bite. I've got that. So Adobe Q1 earnings, your essential summary tells you this is a really nice quarter for the company. Over $5.7 billion in revenues, very profitable at that. But the stock market just didn't like it. And I think the fundamental thing isn't the 10% growth. It's being driven by AI. It's the fact that AI hasn't accelerated that. But I think the most important number, the one number that tells us a whole lot, is that part of their business that is in fact digital media. It's the biggest part of their business, 75% of revenues, and it's growing really nicely at 11% year over year. It's not gangbusters, but double-digit growth at this size, I'll take it. All right, this is Cory Johnson with Epistrophy Capital Research. Thanks for checking us out.